Okay. All right. So we are going to start with capital structure. Like always, I'm not going to cover the theory part. Whatever will be required for solving the questions only I'll be covering, and we'll be practicing few questions. I have 2 questions for today. And if we have some time, I'll also practice. I have one question from WACC also. If we have time, we'll see. All right. Before reading the question, like always, I have 4 things to discuss, which is going to help us in solving this question. First one is, as you can see, it reads debenture versus equity share versus preference share. I mean, it's been so long that we have been introduced to these kind of words that I think we would have a good idea, even though not full, at least some idea about what these things are. Can somebody tell me, don't tell me what is a debenture, what is a equity. I want to know what is the difference between these. Primarily, what is the difference?
Hi, Dheeraj. Debentures, like the company is not liable to pay back, but in equity they have to pay mandatory, right?
Mm,
I'm not sure
you
whether I
said
have.
you said the other way around.
Okay,
Yeah,
so
yeah,
debentures means they have to pay, means company is liable to pay at
yes,
any cost,
yeah,
but in case of equity, it is like taxation.
correct, correct. Mm. Then in that case, what about preference?
Really, honestly, I'm not sure what it
Okay,
means.
fair enough, fair enough. I'll tell you that way. Yeah. Anybody else who has any idea about this?
And in equity we get dividend, in stocks we get dividend, and in debentures we get interest. I remember something like that. I'm not sure.
Yes, yes, yes. That is correct. That is absolutely correct. Now, if that's the case, if in equity we get dividend, in preference, what do we get?
There also we get interest.
Okay, okay. Interest only.
But that we get after paying. The first preference is always to debentures.
Hmm. Okay. All right. So I'll tell. Preference actually it's similar to interest, but there's still called dividend only. They have a fixed rate of dividend. Who? Preference shares. Okay. The difference between equity and preference shares is basically whatever is paid to them is called dividend only. However, for preference shareholders, the dividend percentage is fixed, just like debentures. So debentures, as we already know, there is a certain fixed percentage, and whatever you pay to the debentures, no, you can claim as an expense to the income tax department. So what does that mean? I'll repeat that sentence. Whatever you pay to the debentures, you can claim it as an expense to the income tax department. Then how will it help? How will it help us if we do that? Can somebody tell?
It
It will
reduces the tax
exactly.
liability on us.
Exactly. It reduces our tax. However, equity and preference, whatever you pay, you cannot show them as an expense to the income tax department. That means those are not deducted for the purpose of calculating the tax liability. That means those are not going to reduce our tax. So one of those differences is this one also. So whatever you pay to the debentures, that is tax deductible. A particular terminology used is tax deductible. However, the equity dividend or preference dividend are not tax deductible. You would be able to relate to the terminology, right? Tax deductible meaning thereby it will reduce tax. Not tax deductible, that means it will not reduce the tax. I think that's pretty much simple. Any doubts in this? We're going to use this concept right away. Okay, if no, then let me move on to the next one.
Dheeraj,
Yeah, please.
just equity is something related to share equity, right? Which is given to shareholders.
Yeah.
So it's kind of a profit.
Yeah.
So profit
Which
always like comes after income tax, right?
no. Tell me which part are you telling that is a profit? Are you referring to what we pay to the equity shareholders? That's what you're calling as a
Right,
profit?
right,
No, that's
right.
not a profit. That's not a profit. Are you thinking from an investor point of view?
Right.
No, we are not thinking from an investor point of view. For investor, obviously, the dividend is a profit. I get that.
Mm,
For an
mm,
investor, suppose I have a company, you are the investor, you
mm,
have invested in my company. Whatever I pay to
mm.
you, that is profit for you. I get that.
Correct,
But for
correct.
me, what is it?
That is in the form of equity share it is paid.
Yes. For me, what is
Profit
it?
is paid in the form of equity share.
No. For
For
me,
you, it is liable.
no. We have already discussed what is it. What is that name called? It is called dividend. For me,
Dividend,
it is
okay.
dividend. You are the investor. I'm paying you. That
Mhm.
means it is dividend for me. That is not profit. Now you tell me. Now that we are clear about what is the profit. Now you tell me. Repeat that question. What you are asking. Give me 1 second. I'm getting a call. It might be important.
Sure.
Just 1 minute. Huh?
Guys, till Dheeraj join, I have just update. I spoke to one of the seniors, and he was telling like it will be written test. It's not written test, sorry. The exam will be in written format, not typing format. Hello.
Yeah, I think that was given in that this one. You have to do it
Right.
as scan.
Correct. And there will be Viva for them. Means 20 marks Viva, which will be conducted just 1 week prior to the exam.
Prior to the exam.
Right. 1 week prior.
All subjects are okay except RM.
But I'm not sure like how it will be conducted for FM because we
FM,
don't have much theory questions.
no, FM, I think will again, if you have to write it, all the calculations become very fast if you are on Excel.
I think.
No, I'm
For
talking
Viva,
about Viva. Yeah.
for Viva, I think FM uh, is a subject where they cannot ask numerical questions. However, they can very easily test your knowledge by asking very tricky questions. If you have heard of something called the CA Institute conducts this entrance exam called CPT.
Yeah.
So in that CPT exam, what happens is everything is a multiple choice question. Everything is a multiple choice question, and those questions, to some students, if you'll ask, they'll say, yeah, those are very easy. To some other students, if you'll ask, they'll say, no, that was very difficult because I got confused between two options. So that could be, some questions can be framed in such a way on the basis of concept only, you know. Like for example, like right now we were discussing dividend and equity. Somebody will ask simple question, that if we are paying dividend, is it tax deductible? Will my tax reduce? Unless you know the concept, you will be absolutely confused there. That's a simple theoretical question, but it is directly coming from the concept only. So it definitely can be, but I don't think that they'll do numerical part. You know, they won't say, you know, this is what is the trial balance look like, and you calculate the current liability, or you calculate the MPBF. So I don't think that can be done, but yeah, theoretical part definitely can. Yeah.
Anyway,
Yeah.
we will face. यार क्या करेंगे?
We'll
There's no
see.
other
Yeah.
option.
So there's no
All
metal
other.
option, huh?
Pardon?
No, metal will be there. Metal is there. But the thing is, we are not supposed to type in metal, or we are not supposed to use the Excel sheet for FM. We are supposed to write it on paper, and we have to upload it.
Okay.
Okay.
The thing
How
is, we
FM
have to
FM okay, but how about others? We have to there also you have to write it, huh? Otherwise,
everything has to be written
then
in
what is the
paper.
use of
And
metal then? Just for looking our
metal is
face,
just
huh?
to monitor. Yeah, monitor, and we have to place the laptop a bit far away from ourselves so that we are observed like our face, our paper, and our pen is like monitor.
Okay.
Okay.
From
We'll do it. यार, as it comes, क्या करेंगे?
But yeah, it's got timetable अभी तक नहीं है ना. I mean, there's no timetable yet, right?
There
It's
is no
before 1
timetable,
month.
but
Yeah.
right, second year exams have been already started, and so I got an update from them.
They started May 15th, yeah.
No, May 20th, 20.
Oh, 20th only.
Yeah.
Yeah.
Shell, your voice is breaking up. We are not able to hear. You're saying something, right?
Yeah, same
Sure.
here. I cannot hear him properly, but yeah. Anyways, I personally, I feel this is one of those things which falls in the category, it is what it is, and we're going to deal with it in any possible way. We'll see how it goes. Coming back to the discussion, let me come back to the fact, the second one that I have for discussion. Everybody can hear me, right?
Yes, Tej.
Yes, awesome. There is a chat. Okay. Great. Now I have a question for you. Have you seen or have any exposure to this so-called sharks? Does anybody have any idea about it?
Only from Shark Tank.
Shark Tank, yeah, Shark Tank only I'm talking about. So in some other countries, they have another show called Dragons, and there are other stuff also, but similar concept. So if you have any doubt, idea about it, you must be able to relate to when I say, in every pitch, they say some things like this. I need this much of dollars for this much of equity, this percentage of equity. Have you heard of it? Can somebody relate to that?
Yes.
Yeah, awesome. Now, that's somewhere around that we'll be discussing. Let me give a small example and we'll relate to that. Suppose we have a very small company, and in our small company, we have invested 1 lakh rupees. We have invested how much? 1 lakh rupees. And that 1 lakh rupees we have divided in 100 rupees share. So that comes to 1,000 shares. Okay. So we have invested 1,000 shares at 100 rupees each for 1 lakh. Now we got to know that our business is working really fine, and let's expand. Let's open outlets in some more parts of the same city. So we need more investment, and we don't have money with our own hand. We need 5 lakh more rupees. We saw what the market is. We can expand for 5 more lakhs. Now the question with us is, should we invest the whole thing from our own hand? Should we go to an investor? That's when we saw that we don't have money in our hand. And suppose we went to the Shark Tank people, okay? And one of them gave us the option, you can, I'll give you the whole money, I'll give you 5 lakhs, but I'll take equity for it. The whole thing as a equity. Now, if that happens, what the question that I have for you is, what will be the total amount of equity after that investment for your company? What will be the total amount of equity after that investment?
Dheeraj, really sorry, I did not got that example like what you said.
Okay, no problem. I'll repeat that. So we have a company. Now in that company, we already have 1 lakh rupees invested as equity. And in that equity, we have portions like 1,000 shares at the rate of 100 each. We need now 5 lakh rupees. One of the Shark Tank guy told us that he'll invest the 5 lakhs, but he'll need equity in return for it, as a return for it. So the whole money he will invest, however, whole thing should be equity only. Now, if that's the case, what will be the total equity amount after that investment?
6 lakhs, right?
6 lakhs. Absolutely. That's as simple as that. Just add those two, 5 lakh plus 1 lakh, isn't it? So 5 lakhs plus 1 lakh, that comes to 6 lakh. If 6 lakh is the total amount of equity, what is the new number of shares?
600?
100.
6,000.
7,000.
Right? 6,000.
6,000.
100 rupees per share. Okay. 100 rupees per share, that means 6,000. So why this is relevant? Now look at it, how much of share of equity you have and how much of share of equity that new guy is having. You can relate to it, right? You only have 1,000 shares. He has now 5,000 shares.
But one question here, Zero.
Yeah.
Are we like promising him to like give like entire shares as he has invested 5 lakhs? So we are giving like per share it is 100 rupees. So we're paying him like 5,000 shares.
100. No, 100
giving him 5.
No, 100 only. 100. Value of the share is 100 only. Yeah.
Right. So we are giving him 5,000 shares, right? For 5 lakhs investment.
Yes.
So what is the profit for the company? When he's investing, that there should be some profit for the company, right?
We'll see that. Going forward, actually, we'll exactly see that. As of now, we're just focusing on if he invests, what is the consequence? Okay.
Got it.
Yeah, we'll see. We'll go to that profit part. I have actually a question for you when we are going there. I'll deal with it in the fourth one that I have in
Sure.
mind. Yeah, these small exercises. So now, if you look at it, now you have 1,000 shares and he has 5,000 shares. Now you can see the equity actually varies. Now his decision will be the final one, even though your decision is against exactly different. I mean, opposite to that. Now let's come to the second one. One person says, you know what? I'll give 50% equity, 50% debt. One person says 50% equity and 50% debt. Now tell me, what is the total amount of debt that you have right now after that investment?
2.5 lakhs.
No. Total amount of
He
equity.
said,
Total amount of equity.
okay, so present 1 lakh plus 5 lakhs, right? So 3 lakhs is the debt amount.
No. Anybody with another answer?
3.5.
3.5 is the
3.5.
correct answer. Yes,
Yeah.
3.5 is the correct answer. How did it happen? So 5 lakh is the new investment. 50% of that is equity. That comes to 2.5 lakhs. That plus your existing 1 lakh equity, that comes to 3.5 lakhs. Now, if 3.5 lakhs, what is the revised number of shares?
So he has 2,500
3,500.
plus, yeah,
Exactly.
1,000.
3,500. Now in this 3,500, your number of equity shares are 1,000. His number of equity shares are 2,500. So the ratio is slightly different, but still it's more than yours, right? So the percentage of equity, when in Shark Tank and other shows, they talk about percentage of equity, they talk about this only. And whenever you go for a funding, no, these calculations are very important, whether it's whoever is the investor. So these calculations are very important. So which is exactly why, even if whatever background a person is from, if he's dealing with a company, he should know the basic analysis of this kind of things. No, he should be aware about it because it helps in decision making, especially at this point of times. Now, suppose one other person comes and he says, you know what, I won't take any equity. I'll invest, but give me debt for it. I won't invest anything in equity. I don't want equity, basically. What is the revised amount of equity now in such case?
If he don't want equity, then what he's expecting, like
Debt.
after investing?
He's saying,
Debt.
you know what, I don't want equity. I want fixed amount of interest. So I'll take debt.
So equity will be 1 lakh only.
1 lakh only. Absolutely correct.
Hmm.
Now, if that's 1 lakh, then shares will exactly remain same as 1,000. Okay. Now, this analysis will help us a little bit later when we move to the question. Just be familiar with this. Anyone is having any doubts in this calculation?
The last one, no equity part.
Okay. The no equity, when he says no equity, then obviously he's taking a debt, as I said. That means whatever your existing equity was, what was the existing equity? 1 lakh only, right? We
1
already
lakh,
have invested. Yeah. So that one is the revised equity also, because he is investing nothing in the equity, right? Makes sense, right? So that's why 1 lakh.
Okay. Right.
Yeah. Anybody else? Okay. Okay.
So this is yearly basis, right? Whatever like returns the investor is expecting, it is based on the time frame. Like when
No. When you're talking about any item from balance sheet, no, those are not on a yearly basis. Those are as on date. On a particular day, that fact is happening. That thing is happening. When you're talking about profit or anything related to profit and loss account, that's when that period thing comes. From this to that. Are you getting my point? So it is not really for a whole year. Anytime it can happen, right? Suppose you're in the middle of the year, somebody comes and invests in your company. On that day itself, your equity will change.
But balance sheet is always quarterly based, right? Yearly and quarterly based, right?
If
How
you
is
look
it
at the look at the heading of balance sheet, no, any balance sheet for that matter,
as of date,
it
correct?
is as of. The reason is that is prepared on that particular day. That is not representing a year, that period for which it is prepared. It is representing that day. If you think about it, if you think about it, suppose you had an asset, you had purchased an asset 2 years back. It is still existing in your balance sheet. How come? If you are preparing for that period, how can it exist in your balance sheet?
carried forward, right? It will be part of a carried forward. from
That's
the
what.
previous
That's exactly my point. If it is getting carried forward, that means that is not exactly representing that period. It is representing everything that has happened with the company.
Correct.
Right. However, profit and loss account is slightly different. That represents only a particular period. That is 1 year. Whatever has happened before that, that is not included in that. Now, coming back to this question, it is not the question that you asked, the debt and equity part, whatever we are determining, it happens on that particular day, on that particular transaction. It is not really happening on a periodical kind of basis. The day it will happen, that day itself, the equity changes.
Got it.
Yeah. In any other doubts, guys? Okay, let me move on to the next one, next exercise that I have. This one is a task for you. Okay, now first one that I have is, suppose you have 1 lakh profit. Suppose you have 1 lakh profit and you have 10,000 shares in your company. 1 lakh profit and you have 10,000 shares. What is your earning per share?
100 rupees.
No.
Means it's divided by 10,000 divided by 1 lakh.
That you have profit. How much
10
of profit?
rupees.
Somebody said 10. Cell was asking something. Can you repeat that, Cell? I could not hear it.
It's a 10,000 shares and 1 lakh profit, right?
Yes.
Yeah. So 10 rupees.
10 rupees. Sami, you did correctly. You just made that mistake in the calculation only. I think you did the division correctly. Just that you said 100. That's why I said no. Is that okay? Yeah.
Yeah, that's it.
Now let me make it slightly complicated. You have 1 lakh profit, tax is 30%, and there are 10,000 shares. What is the earning per share?
7.
It is
7.
same.
No, 7. It will change. So when I say 1
Because,
lakh, that's
profit is
before
after
tax.
tax.
Assume that is
Profit
before
is-
tax. Assume that is
Ah,
before tax.
Okay.
Yeah, I should have clarified. My bad. Yeah.
And what is the rate of interest will also be required?
Yeah,
Rate
no
of
date,
tax.
no date as of now. Just the tax rate I have given 30%. That's all.
30%.
Yeah.
70,000. 7 rupees. per-
7 rupees is the correct answer. Everybody got it? Any doubts until now? Because this is going to be complicated in the next 2 examples. Okay, I'll take that as a no. Now, one more example. You have 1 lakh profit. Now, before tax, before any other expense that I'm going to tell further. Okay. Now, one other thing that you have is a debt of 5% each, 5% interest basically for the amount of 50,000. So 50,000 debt you have at the rate of 5%. Tax rate is 30%. Your number of shares is 10,000. What is the earning per
And
share?
1 lakh is your this one
EBIT.
earnings.
EBIT, earning before interest and tax.
Yeah.
So everything is before basically. So you have to deduct everything. That's what.
%30 tax rate you said, right?
Yes.
So 5% on 50,000 means it comes around 47,500, right? 47,500 plus 50,000, so it's 97,000. Sorry, 97,500. Then 30% deduction on that 97,500.
What is the EPS then? Earning per share?
6.825.
Perfect. Whoever is not getting the 6.825, let me know, please. We'll discuss.
I got it. Yeah.
Great.
So it is like 97,500. Then we have to apply like 30% tax on 97,500, which comes around 68,250.
Perfect.
So if you divide by 10,000, then it will get 600.
Perfect. Yeah, perfect. Anybody stuck anywhere?
Can you please?
Yeah, sure. So in what I said was 1 lakh was your income. That is before interest, before tax. Nothing is deducted as of now. Interest amount comes to how much? Can you tell?
Interest here is 5%, right?
5% of 50,000. That comes to
25.
2,500. What is your income after interest then? After you deduct the interest, that comes to
Okay, that will be 9,75,000.
no,
Oh, sorry,
that's 97,500.
97,500.
Perfect. Yeah.
Yeah.
Now tax is at the rate of 30%. How much the tax comes to?
Okay, 30% of 97,500.
Yes.
So we have to do 70% of 97,500. That will be the answer.
No, that is not the answer yet. So that comes to
Oh.
68,250. 68,250, right? You divide that by 10,000 because I'm asking for earning
Right.
per share, right?
Mhm.
So that comes to 6.85. You got it, right?
Yeah.
Yeah, awesome. Any other doubts, guys? Or any additional points also? That's always welcome. Awesome. I'll take that as a no. Now let me complicate it a little bit more. And now be very cautious when I say this, okay? Because this has slightly complication to it. But once you get it, then that's done and dealt with. 1 lakh is your income. 50,000 is your debt at the rate of 5%. Preference shares you have 25,000 who are to receive a dividend at the rate of 3%. Preference shares you have 25,000 who are to be paid dividend at the rate of 3%. Tax you have 30%. Number of equity shares is 10,000 other than those preference shares. Okay, other than the preference shares, equity shares you have 10,000. Tell me the earning per share.
Uh, 3.3775.
Give me 1 second. I'll just verify that.
Sure.
Six 6.75.
Sorry, come again.
0.77.
6.75 cell shade. Yeah, that's the correct answer.
Yeah.
Sami, your answer was? Can you repeat, please? I forgot.
3.375.
No, that's incorrect.
I'll tell you what I had done.
We'll go. Let's just wait for other answers. We'll go in detail.
Sure.
1 second.
Sure.
Yeah. Others? Anybody got the answers? I'll wait for 30 seconds more. If anybody has any stuck also, you can ask in between. Okay. Yeah. Yes, Sami, please go ahead. You're saying something.
So out of 1 lakh, so
Mhm.
50,000 is at the rate of 5%. So it comes around 47,500.
Oh, 1 second.
So,
Not 47, no? That comes to 97,500. You deducted from 50,000.
yeah, 50,000 at the rate of 5%, right?
No. 50,000 is your debt, but your profit is 1 lakh, no?
Okay, so 5% of 50,000, right?
5% of 50,000. That comes to your interest is how much? 2,500, right?
Right.
Now
Right.
your income is how much?
So 25,000 plus.
No. Income is how much? Income is 1 lakh, no?
Correct. One second. Let
So-
me do this.
Yeah. I got the point where you did the mistake. Repeat it. Yeah. Go ahead. Fix it. I think you would get the answer.
47,500. I'll get 47,500.
No.
right?
47 doesn't come in picture at all, Sami.
So what you have done is you have deducted 2,500 from 50,000. So you should
Correct.
deduct 2,500 from 1 lakh, right? 1 lakh is your income.
So this is actually nothing but if you got an answer of 6.825 earlier,
No.
that remains same. That doesn't change.
I
Right?
did in a similar way. What I got in the previous question, right? 6.825. I did in a similar way. Like if I put 50,000
So
minus
you don't have to do calculation before that. You have to do calculation after that.
Still, I'm not sure.
No
So
problem.
did you get 68250?
No, I did not. I got 3.3. That's the reason.
No. Okay. Earlier, before this question,
Earlier I got correct. Earlier I got 6.825.
6.8250, right? Total
Yeah,
income. Now
correct.
you go by the same calculation and deduct 3% of 25,000. You don't have to do
Yeah, I
anything.
did that. Okay. Mm, minus 3%. So it comes to 750.
Yeah.
Then 25,000 minus 750, 24,250.
So where is
So
24,000? I don't know. You are doing something wrong.
no, 3% of 25,000 is it comes to 24,250, right?
No. That is right, but you have to deduct only 3% of from the income. I think Dheeraj, you will have to clarify.
Yeah. So that's where it's slightly confused there only. It's all right. Before moving to him, let me just ask others. Did you get it? 6.75. Anybody who has not got it, please let me know. Okay, I have a question for you guys. Let me just address Sami, then I'll ask you guys one question that I have. Sami, now let me just repeat the question once more. We'll go from the start only. Question was, our income is 1 lakh. We have debentures of 50,000 at the rate of 5%. We have preference shares of 25,000 who are going to receive the preference dividend of 3%. Tax rate is 30%, and our number of equity shares other than the preference shares is 10,000. Now, if that is the case, we calculate the debenture interest first, which you have done correctly, which is 50,000 into 5%. Am I right? Which comes to 2,500. If our income is 1 lakh, our interest is 2,500. What is our earning after interest? I'll repeat that. If our income is 1 lakh and our interest is 2,500, what is our earning after interest?
1,02,500.
No. How can it be? Interest is an expense, no?
Interest to the company you're talking about.
Interest we are paying, no? We are debentures, no? We have to pay, no? We have to deduct.
Okay, so it comes to 97,500.
Perfect. Now on that, we have to pay tax, right? So this is profit before tax, PBT. Now we have to pay tax. Tax is at the rate of 30%. That comes to how much?
It comes around 68,250.
Perfect. That is your PAT. That is your PAT you are saying, right? Profit after tax. That is your PAT. Now, if that's the PAT, you have to deduct the preference dividend also. What is the preference dividend amount?
3% of 25,000.
Perfect. That comes to 750. Now you deduct the preference dividend from PAT now. That comes to
67,500.
Now divide 10,000 from with that.
0.75.
Perfect. Is there any doubt? Do you have any doubt in this process, or is it clear?
Still slight doubt. I'll just have a look of this number.
Sure. Go for it. Yeah. Take your time. If you, after thinking also, if you're having confusion, then just get back. We can have a discussion on that. No problem.
Sure.
Now,
Sami, one thing, just if you want to remember, there is an income given, right, which is before interest and tax, EBIT, which is 1 lakh. After that, whatever Dheeraj tells, interest, dividend, this, that, all that has to be subtracted from the base income.
1 lakh.
From 1 lakh. So first you deduct the interest from 1 lakh, then you deduct the tax from that, then you deduct the preferential share interest or dividend from there, and then whatever comes is called net income. So you don't have to subtract anything from the other numbers which he has given, like 25,000, 50,000 and others.
Oh, okay. I was doing that mistake. Okay.
All that has to be deducted only from the income.
Okay.
Got it?
So this is got it. So 50,000 of 5% means just to calculate what is the tax we have to deduct from 1 lakh.
Yes.
Okay.
What is the interest you have to deduct from income?
What I was thinking is 50,000 at 5% means out of 1 lakh, 50,000, 5% is applicable. And out of 1 lakh, 25,000 is applicable 3% of tax. So 75,000 taxable and 25,000 is like interest, profit we have.
Yeah, I think that's where.
Thanks for clarifying.
Sure. Awesome. Now, the question that I have is within less than a minute, I think the meeting will end. You can join in the same link and we'll continue from there. Now, the question that I have for you is this. Why did you deduct preference dividend after calculating tax? And why did you deduct debenture interest before calculating tax? I'll repeat that in case somebody is not understanding. Why did you deduct preference dividend after calculating tax? Why did you deduct debenture interest before calculating tax?
As you clarified, right? Debentures we can claim it to get the tax, right?
Absolutely
Kind of
correct.
tax saving.
Absolutely
But in case of
correct.
preference, we can't.
What was that word that I used? Phrase that I used? Tax?
Tax saving.
Deductible. Because debenture interest is tax deductible and preference